What is the point of owning any other asset? This is the supermassive black hole of assets, which is why we personally are all in on crypto, because this is the big one. This is the greatest macro trade of all time. This is why many of the greatest macro investors of all time have moved across to crypto, because it is such a powerful trend with such powerful returns, and the cyclicality makes it also tradable. So all of the nonsense about Bitcoin's too volatile, it's a bubble, it's going to burst, that happens every cycle. People don't understand it's the duration of your investment that matters. If you have a long-term time horizon, those pullbacks are actually what you look forward to, because you can buy more at cheaper prices. Or you can, if you want to, reduce risk from the cycle. I've done both.
Raoul Pal, a co-founder of Real Vision and a macro investor, is once again grabbing attention for his audacious predictions about the cryptocurrency markets. Pal is reaffirming his belief that the next big bull run, which may last well into 2026, is already underway. He claims that every significant signal he monitors is pointing toward a potent acceleration phase that is already starting to take shape in his most recent market study. In the past, this type of arrangement has led to tremendous increases in Ethereum, Bitcoin, and the broader cryptocurrency market. This is where things start to get intriguing, though. Raoul cautions that the dominance of Bitcoin might be reaching its zenith, paving the way for money to shift into Ethereum and other high-performing cryptocurrencies. He also asserts that Ethereum is well positioned to seize that momentum. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
As Bitcoin dominance collapses and the ISM goes up, only then do you get the rest of it. It all lies ahead, and you're all getting frustrated, and you're getting frustrated because A, you've probably got the wrong allocation for this point in the cycle, or B, the ISM has been lower for longer, which is why we've not seen this yet. But when we think of Bitcoin, it's actually driven 94% a year excess returns over the rate of debasement. So you've got this asset that is in la-la land in returns versus anything else. It's 144% annualized returns. That's including all of the drawdowns. So all of the nonsense about Bitcoin's too volatile, it's a bubble, it's going to burst, that happens every cycle. People don't understand it's the duration of your investment that matters. If you have a long-term time horizon, those pullbacks are actually what you look forward to, because you can buy more at cheaper prices. Or you can, if you want to, reduce risk from the cycle. I've done both, and I found, generally speaking, if you don't need to take lifestyle chips off, it's better to have the drawdowns and not try and time them, because I've done that too, and that's not the easiest one always. And it's also very difficult to put back in what you took out at the peak. You know, if you've taken out 100 grand at the peak and the markets are crashing, everybody hates crypto, you think everybody's going to prison, the last thing you want to do is put your 100 grand at risk back again. So you always do less, and you end up actually lowering your returns over time as opposed to adding to it. So you've got these assets that are cyclical, that have this incredible adoption rate that well in excess of the debasement of currency, which is crucial. And Bitcoin is the one. Bitcoin, in fact, Bitcoin dominance over time will change. We're trying to capture the megatrend. That megatrend is so powerful because it's how you unfuck your future. Now, if you look at all of the assets on this table, what we've got is everything in orange here underperforms the debasement of currency. So you're actually getting poorer by owning small caps, REITs, treasuries, preferred, high yields, investment grade bonds, everything, unless you're using leverage. There's only a few. The SPY, well, really that's in line with debasement plus inflation. So when we're looking at those, you've actually only got two asset classes, technology stocks and crypto. And within crypto, you've got these ridiculous returns where Bitcoin since 2012, we didn't go 2011, we didn't go back to 2010 or 9 because the numbers get too stupid, has annualized 130%, with that 64% drawdown, 73% drawdown, and 56% drawdown. Ethereum is doing about the same, about 133%, and we expect it to outperform in this cycle as it has done in all of its cycles over time. And Solana is currently, because it's newer in its adoption model, has been outperforming Bitcoin And then if we were to add SUI in here, which Julian and I are heavily invested in, that has outperformed Solana because it's earlier in network adoption, where you get the steeper part of the adoption curve. So really speaking, there's not many assets to own unless you want a future personally. So when you want a future, you start to think about, okay, I've got crypto and NASDAQ. And I know a lot of you right now are all trading tech stocks because Bitcoin's been in this kind of sideways chop period. So you're all piling into tech stocks. Julian and I have tons of them in the portfolio. We love the technology trend. It's a really easy trade, has been an easy trade. But if you're honest with yourself, if you were to own one or the other, then you find that the NASDAQ has underperformed Bitcoin by 99.94%. What is the point of owning any other asset? This is the supermassive black hole of assets, which is why we personally are all in on crypto, because this is the big one. This is the greatest macro trade of all time. This is why many of the greatest macro investors of all time have moved across to crypto, because it is such a powerful trend with such powerful returns, and the cyclicality makes it also tradable.
According to Raoul, cryptocurrency is expanding more quickly than any other investable asset in recorded history. He predicts that there will be more than 1 billion active cryptocurrency wallets globally by the end of 2025. It is nearly impossible to comprehend the magnitude of this expansion, which signifies the world's fastest ever wealth creation. Following decades of investigation, according to Raoul, all the evidence goes to the same conclusion. Markets are driven by liquidity, and cryptocurrency is expected to outperform all other assets. He has been advising investors for months that the current circumstances are favorable for a period of sharp parabolic price gains in the cryptocurrency market. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
It's also the most powerful, the greatest macro trade of all time, because it's driven by network adoption. Remember, Metcalfe's law is driven by the number of users and the total value transacted on a network.
Bitcoin is a network value asset and it's trading within a long regression channel. The more time extends, the higher the price targets become. So here, if we're just looking into year end, let's say Bitcoin does nothing from here and just stays between the fair value, call it, and the -1 standard deviation oversold level, we basically will approach, let's say 210,000, right? If we get to 1 standard deviation, it's 412,000. If we get to 2 standard deviations oversold, right, which has happened every other cycle in the past, we're looking at something, and I admit that green's a little bit hard to read. It's like 800,000, 805,000. But here's the thing, because we detrend Bitcoin and we know it's a function of the business cycle, now all of a sudden you can loosely infer levels of the ISM that would correspond with certain price targets within Bitcoin, right? So for Bitcoin to reach 210,000, as I had referenced before, that's equivalent to an ISM of 52, something like a 1 + 1 standard deviation, 57.6, that would be Bitcoin around 400,000. And then an ISM of, again, hard to see with the green, 63.3 would be Bitcoin at around 800,000, right? So you see, so as time goes on, the prices move higher. And because the ISM is confidence, earnings, the business cycle, everything else, then that all of a sudden accelerates the move. And where things get really interesting is here I've pushed out the targets another year to year end of 2026. And you can see just by way of this log regression channel and the passage of time, now the targets are higher. So ideally what you need for, let's say, Bitcoin to hit $700,000 in price is you would need the business cycle to extend to year end of next year, right? And the ISM to be strong, okay? But what we know right now is already our lead indicators are suggesting the ISM will be strong. And 9 months from now, we should be in a situation where the ISM is in its mid-50s as opposed to the current level of 48.7. So in a situation where the business cycle extends into 2026, how far? We don't know yet, but already this has us into Q2 of next year. So that's that passage of time plus the strength of the cycle. If we get to that 55, you have to think about higher price targets, okay? Now, the scarring here, I believe, comes from this 2020.
The scarring. Everybody is scarred because everyone has this framework that used to be around about the halving, and I still get the thing about the ETH blow off top that I was expecting last time around didn't get, I didn't understand this then. It's the work that we've done subsequently. You've always got to go and do the work when you're wrong to understand, okay, why was I wrong and what is the key factors? And people are still so scarred by this that I think it's going to help people, because if we're right, the cycle extends longer. And if we're right, prices go further than expected, and it will not end this year. And I know everyone says, yeah, this time is different. Sure. From all of the work that we do, probabilistically speaking, it's got an extremely high probability of going well into 2026.
Raoul Pal concludes with a strong observation. The future of Bitcoin is closely linked to liquidity and the business cycle. According to him, Bitcoin might still reach $210,000 by the end of this year if it only stays within its reasonable value range. Depending on how powerful the business cycle gets, the goal might increase to $400,000 or even $800,000 if momentum pushes harder. This cycle differs from previous ones in that it is not restricted to the customary 4-year halving cycle. According to Raoul's analysis, the length of this bull market will depend on the overall state of the economy, debt rollovers, and liquidity requirements. In other words, Bitcoin may directly profit from governments having to provide funding to control debt and sustain growth. He also highlights how the last cycle in 2021, when the surge was cut short due to central banks pulling liquidity too quickly, has left many investors still scarred. However, it appears different this time. According to Raoul, this cycle has a far higher chance of continuing well into 2026 because of the debt structure and the maturity schedule, which make liquidity injections all but necessary. Prices may increase significantly more than most people anticipate if that occurs. The main lesson is to not undervalue the importance of liquidity. The business cycle is preparing for another significant upswing, even when it seems like markets are stagnating. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.